It's Thursday, August 22nd, and this is Markets Daily, hosted by me, Jen Sanasi. As you know, on this show, we navigate the currents shaping the crypto markets, providing insights against the broader financial landscape. So, whether you are actively trading or simply just fascinated by the volatility of crypto markets, this show is your compass to understanding what's happened, where we are, and where we're going. Joining the show today is founder, CEO, and CIO of One Roundtable Partners and 10T Holdings, Dan Tapeiro. Dan, welcome to the show.
All right, glad to be here. Happy to be here.
Happy to have you here. Now, this show is all about the crypto markets. Talk to me about what you're watching this morning.
I guess, look, I look at things from a lot of different perspectives. I mean, I always start with the big global macro.
hmm
What are the big central banks doing? What does liquidity look like? What are the broader markets doing? And I think, right now, my focus is the 2-year and the 10-year notes in the US have dropped down to new lows in yield. The 10-year, I think, in the 370s now, and the 2-year 390. This is a trend that I'd been anticipating for quite a while. The drop in inflation that we've had over the last 18 months has been pretty severe. And the Fed has maintained a much tighter than expected policy, at least by me.
hmm
To be fair, I did not expect them to raise from 0 to 5% as quickly as they did. Frankly, I thought it was a bit unwarranted. But growth stayed stronger than one might have expected. And now I think we're seeing a pretty severe slowdown. And so the unemployment numbers last time around were weaker than expected. And every bit of data for the past 2-3 months has more or less slowed down, except for maybe the housing data, which has just picked up a little bit in the U.S. In Europe has been weak. The Swedish central bank, in fact, just cut rates. The U.K. is cutting. And most concerningly, I guess, is China. I mean, China's economy has been very soft over the past year, and rates there are back down to 2%. So I start with this picture of where is the macro economy going. I think we're slowing, not a recession or a panic necessarily, but and I think that's going to be, and it has been bullish for gold. Gold just made an all-time high, last week, and I think people in the new world, in the crypto digital world, the world that I'm in, they ignore some of these traditional market prices. But gold making an all-time high is a sign of liquidity coming, and also the dollar, I think, has begun its bear market. The
hmm
euro yesterday hit 111. That was the highest level in some time, and I think it's going to continue. And so over the next 2, 3, 4 months, as I look out, I'm very bullish on Bitcoin and Ethereum. Those to me are the core assets of the digital asset ecosystem broadly, as I call it. The other cryptocurrencies to me are more venture projects. I think Solana probably is the one cryptocurrency that's maybe moving towards becoming a core asset. But I look at that broad background of the traditional macro, and I think it's very supportive for core crypto. But if you look beyond just the core assets, you see that the level of usage and interaction with blockchains has really exploded in the last 6 months. Part of that is attributable to the ETH and Bitcoin ETFs that have brought new people into the ecosystem. Part of it is a result of Coinbase's L2 base, which has onboarded a lot of people into DeFi. You have new things like DPEN and RWAs, which are small but are taking off. And of course, the stablecoin business has been extremely strong. So you look at, I look at it, as you see, from 20,000 feet, the
I was
big
going to say,
macro.
Dan, you're watching everything this morning.
Well, I can't avoid it. I don't know. I'm an old guy in the space, and I spent 25 years managing a portfolio and trading in the old macro markets, and was a gold guy and still am. And I think crypto people look at me and like, how can you be a gold guy and a Bitcoin guy? And then deeper down, the companies we invest into are all ones that are very active within the broad digital asset ecosystem. And so through 10T and 1RT, I've invested into 24 different businesses in the space in the growth stage. We've deployed the AUM today, I think, is about 1.4 billion. We have board representation on 12 of our 24 businesses. So we really know what's going on within what I call the growth stage. So that's a lot there. a lot
There's a
Yeah.
lot there. There are some things I want to narrow in on what you just said. And one of them is you being a gold guy. Like you said, gold
Yeah.
recently hit its all-time high while Bitcoin is in kind of a holding pattern, unable to break through its current levels. Talk to me about the similarities and differences you see between the two, because as you know, many in the
Yeah.
news refer to Bitcoin as digital gold, but it seems like the two are performing a little bit differently than each other right now.
Well, I wouldn't really say that. I mean, they are, of course, because Bitcoin has massively outperformed gold over any time period, reasonable long-term time period. But I mean, look, as our funds are 10-year life funds. I'm a long-term investor. The difference between Bitcoin at 1670,000 is nothing. Like for me, essentially, Bitcoin is at the all-time high.
Mhm.
Whether it's 10 or 15% lower or higher, it's still, I think we'll be, over the next 6 months, I think we'll be over 100,000 in Bitcoin and probably over around 5,000 in ETH as well. I mean, I think there's a big bull rush coming. And look, sometimes gold is maybe a little ahead, sometimes it's behind. I think because Bitcoin is broadly speaking more of an emerging asset, at least versus gold, which is 5,000 years old, it tends to be more, there's more gamma there. It moves more quickly. And I think the upside, of course, in Bitcoin and ETH is much greater, but both are a reflection of global liquidity trends. And so when liquidity is plentiful, which I think the markets are beginning to sense that it's going to become, these liquidity assets move. What I would say more importantly is that with or without, or regardless as to where the short interest rate is, the Federal Reserve short interest rate, the activity in the on-chain world is up at least over 100% in the last 6 months. And that's with rates having stayed to the same place. And I keep saying to people, look, when the interest rate was zero, Bitcoin was around 65,000, the peak in 21. Rates went to 5%. They're still there. And Bitcoin is now at the same price. When that short rate goes from 5 down to 2.5 or 3, Bitcoin should easily double just on that. Forget about all of the myriad wonderful developments going on chain and in this space, all the innovation. Forget about all of that. If you just look at that one measure, I think there's cause for being super bullish right here.
Well, on that note, we know that Fed Chair Jerome Powell is speaking at Jackson Hole today. What are you expecting to hear?
I don't really listen to that too much. I think the market's already moving towards pricing in, the right scenario. I think he sees the data. He's been a little bit stubborn, I think, easing because they were late to hike, and then they overhiked. And look, the 2-year note, as I said, is at a 3.9 yield. The Fed funds rate is 5.25. It's already massively inverted. So the market already is pricing in multiple cuts coming from him in the next 6 months. My guess is he just confirms what the markets already have priced in.
Let's broaden it out a little bit outside of the US. You mentioned that you follow global economic trends when you are looking at your strategy. What should folks who are investing in crypto be looking at when it comes to economic data, maybe outside of the US borders?
Well, that's a good question. Normally, folks investing in crypto just kind of YOLO, into some crazy, I don't know, low market cap coin and hope it goes up 1,000x, right? Or they're playing in Doge or whatever it is. I don't really do that. I think that this sector, is, I don't want to say it's mature, but people don't often realize, look, there's $3.5 trillion of value sitting in this digital asset ecosystem. So that's 2.5 trillion is the value of all the cryptocurrencies, plus another trillion of value in the equity, the businesses in the space. And so the macro at this stage, and I think for this next stage, is important. China is the second largest economy out there. I think you've got to be in touch with what they're doing over there, and it's not that difficult. You don't. I mean, I have a Bloomberg, of course, as I have for 30 years, and I know many people don't. But you can follow the economic data. The money supply in China has been very weak. The consumer has been soft. Real estate prices have come in quite a lot, and they've had a lot of difficulty with their stock market. The Hong Kong market earlier this year was at a price that essentially was unchanged from over 20 years ago. Now imagine, I think it's improved a little bit, but imagine in the US if the NASDAQ were at the same price that it was 20 years ago. I mean, the whole country would be in revolution.
Mhm.
I guess what I'm saying is that things have been weak there. And I think that's exerted deflationary pressure to the rest of the world. And I think actually helped slow the US inflation picture a bit. So the world is completely interconnected. It's just, as you said, it's a lot to keep track of. And sometimes it doesn't necessarily have impact. Like, there are times when China can be weak and it may not mean much for the rest of the world. But right now, I think we have sort of a synchronized global slowdown. It's not diabolical. It's not, cataclysmic or anything, but it's definitely a slowdown that's going to lead to lower short interest rates, a bear market in the dollar, which is not bad. Dollar going down 10, 15%. And I think very supportive for the main crypto assets as well. So it's really China. Europe doesn't really move. Doesn't move that much. It grows 2% or it doesn't, and inflation pops up and comes down. So interestingly, though, we have a pretty significant position in Kraken, the second largest exchange in the US, after Coinbase. It's a private company, of course. And they have 60% market share of the entire European market. And we were just updating our analysis there. And I didn't realize that the European crypto market is actually, in volume terms, larger than the US. This really is, and of course, Asia is quite big as well. And, Brazil has, shown quite a lot of growth. So this really is a global macro phenomena, the, invention of cryptocurrency, the advent of crypto. I always say it's the biggest global macro trade of all time, largely because you have people in each country around the world who actually, up and down the socioeconomic strata, no matter what your wealth is, no matter, own cryptocurrency. And so it's very widespread, the ownership. And so, and that's because it's decentralized to begin with. And, I think this is something that we haven't seen before. Global currencies, which I traded for many, many years, realistically, there are only like 15 currencies that are really tradable, and now, well, not only do you have many different cryptocurrencies, but you have people all around the world able to transact in all sorts of things all the time. I mean, it's a phenomenal innovation. I just don't know why everyone else is taking so long to get it right, in terms of global adoption being further along.
I want to talk about specific projects or specific sector now before we wrap up our conversation. At the beginning of the show, we talked a little bit about One Roundtable. You said that you invest in mid to late stage companies in the digital asset ecosystem. Talk to me about what companies you saw, not what companies, what sector you saw a lot of growth in this year, and if you think that sector will continue to see growth, or if attention from an investor standpoint is shifting to another sector that we might see a spotlight on next year.
Yeah, it's too bad I can't share some of these charts with you here, but I mean, I have this great chart, total active addresses across all blockchains, okay? in June hit 53 million. All right, 6 months ago, that number was 20 million. There aren't that many things that grow 150% like that in 6 months. These are really, I would show you, really, fantastic
That chart
chart.
it does really look up and to the right.
It's up and to the right. I mean, I look at mobile wallet users just reached an all-time high. Total on-chain transactions across all blockchains, 7.4 billion. Okay.
So Dan, I got to ask you though, what do you think is driving this? What do you think is driving this? Are new people coming to the space? Are the folks who are already operating in the space putting more attention into it, opening more wallets? What's driving this growth?
I think the people, the initial adopters, let's just call it, who maybe originally have only maybe purchased a little bit of Bitcoin and ETH, are becoming more crypto native. And maybe they're using their ledger live off their ledger to get into DeFi. People are more active staking. I think there's a little bit of this, hysteria around the meme coins. Again, there's a reason for it, but I wouldn't push that too much. Stable coin. I think stable coins, especially on, for instance, Tron, have exploded. When you look at the revenues of the top 4 blockchains, you've got ETH, Bitcoin, Solana, Tron. 3, 4 years ago, there was really just Ethereum. There was no building on top of Bitcoin, right? Solana did not exist. Tron essentially was not used as a payments network. So I think, there are many more use cases that I think are developing that are crypto native. And so for the crypto native people, I think that digital asset world, the on-chain world has exploded. Also, the base layer 2 that Coinbase laid out makes it very easy for people coming into the space through CeFi to then move immediately into DeFi. So I think that's a big thing. And we can't forget the Bitcoin ETF. I don't think it's onboarding people so much into the on-chain world immediately, but for every person that buys Bitcoin in their equity account through an ETF, which I don't think is a great way to go about it, but it's onboarded a huge number of people. After sitting there with their Bitcoin a little bit, they start to do more research. They investigate what's going on in the space, what's going on with this guy at MicroStrategy, who's talking about, Bitcoin going to whatever, 500,000, Kathy Wood. What are these people talking about? Why are they so excited? And then as people investigate and dig into the space, they then, will move into DeFi. Maybe they start staking. There's all sorts of stuff. I think the one sector that's lagging right now is the NFT, metaverse, blockchain gaming area, which was very hot in 21. That's sort of behind what's going on in these on-chain ecosystems. I think that'll change. It's just that it got very overhyped, and I think it's still struggling a little bit for to find its use case is how I'd call it. Whereas something like stable coins, last year settled about $10 trillion. If you think about dollars of stable coins were settled 3-4 years ago, that number was zero, literally zero. So look, I don't see that growth rate continuing for stables, but could we end up, settling 30-50 trillion dollars? Absolutely. But I'm very focused on these sort of innovative use cases, but focused on the equity of businesses that have figured out how to monetize the business area that they're in. So the venture guys are looking for great ideas, and they're making 100 bets and hoping one of them ends up being Google or something like that. We are not. We're investing in companies generally making 30, 40, 50 million in revenue already. Companies between $500 million in value and a few billion, and hoping to make a 5 to 10x return. Whereas a lot of the venture guys with doing the more speculative investment in coins directly, I think really are trying to make a 50 or 100x. So we have more of sort of an institutional type, larger investor, a focus on the space rather than a specific, a specific sector focus.
Dan, thank you so much for
Yeah,
joining Markets Daily this
thank
morning. It
you.
was a pleasure. And thank you for watching. That's a wrap for Markets Daily. If you like to listen to us, subscribe to the CoinDesk Podcast Network that is available on all podcast platforms. And if you like to watch, subscribe to our YouTube channel and give us a thumbs up. Thanks so much for watching today. We'll see you on Monday.